Back with the market right here on ET now. And the market is holding comfortably as I speak right now in the Nifty futures. We're 30 points away from that 11K mark, which we had a touch and go moment with earlier in the day today. The breadth is well positive. I can't say by a huge margin, but yes, definitely the advances are decisively taking over the declines within the F&O universe. It's Idea, after making that 1,000 crore rupee additional payment to the AGR dues and ahead of the Supreme Court hearing, which is slated for 2 p.m. today. Idea is mighty excited, holding up a solid 8% right now. HDFC Bank gets a big thumbs up from the street. A good 4% up in the green. That's where HDFC Bank is. And Britannia is the other one, which is also seeing an earnings reaction, holding up 3.5%, pretty much at the peak of the day. Chola Finance, IDFC First, these are some of the other financial names which are contributing to the gainers today. On the flip side, though, Glenmark, that's down 4%. Sun Pharma, Lupin, so financials clearly taking, or rather pharmaceuticals clearly taking a backseat. And Interglobe Aviation, which is lower by about almost 2% as we speak. But let's shift focus, talk about FMCG. It's clearly been showing some signs of a rebound in the month of June to now pre-COVID levels. The recovery clearly is bigger when it comes to the rural areas as opposed to the urban end of the market. So let's try and understand what really transpired, what's the way forward, and whether or not now that we're seeing localized lockdowns, is that going to again, recede the FMCG sales going forward or not? We've got Prasun, Basu, the President, South Asia Zone at Nielsen Global Connect, joining in on the show. And we also have with us Milind Sarwate, founder and CEO of Increate Value Advisors, LLP, on the show. Gentlemen, morning. Good to have you on the show. Prasun, if I could start the discussion with you, demand for FMCG products clearly is now returning to pre-COVID levels. How sustainable, though, do you think this kind of a growth is? Or is it more a pent-up demand which is at play?
Good morning. Good morning. No, there is a little bit of pent-up demand. In fact, some of our consumer trends are showing that as well, and I'll come to that. But overall, if you ask me whether we expect this to go down in a significant way in the coming months, I don't think so. People were in a bit of a kind of a confined mode, and there was a break free that was needed, and some of the consumer trends are clearly showing that break free tendency. So there's a upsurge in June coming from that. But I think it's largely sustainable, and it's almost coming down to the pre-COVID levels, as you know, which was the case in December, January, and February. Most of this will sustain, I think. Some of the lockdowns can play a role, but largely sustainable with a little bit of the skew coming from the last 2 months of lockdown.
Yeah, absolutely. Milind, morning, if I could get you in the discussion as well. The definition of necessity clearly has changed in our lives thanks to COVID-19. What, according to you, are the consumer spending trends that you're monitoring and picking up, and whether or not there is a stark change and a material difference in how consumers are spending and the behavioral patterns since April?
Sorry, you asked me? Okay.
Milind, yes, the question is for you.
Sorry. I was switching on some light. I'm sorry. I think one of the things at the psychoanalytical level that is happening is that people are climbing down on the Maslow's hierarchy, and therefore there are basic needs coming to the fore. And as Prasun also mentioned very rightly, there is the basic needs of health, safety, hygiene, which are coming back to the fore. I feel that an important part in this entire exercise in realigning the priorities of consumers will be their estimation of how disposable income would pan out in the coming future. I think expectations of future income are going to drive consumption in a big way. And when even the Nielsen report talks about discretionary items suffering to some extent, there may be stops and starts as the lockdown gets in and gets out. But I think for discretionary items to come back in full bloom, I feel clarity and certainty of future incomes is very critical. And I don't see that coming up over the next maybe a year or even more.
If I just take a cue from that one, till the month of May, we were seeing a very big difference in the discretionary items staying really low and a lot of degrowth, and the essentials were still doing well in the month of May. June, we find there's an overall increase that's happening. So, for example, beauty care has gone up. while still below the pre-COVID levels, but it's gone up starkly. Daily necessity items like toothpaste, shampoos, hair oils, washing powders, those have gone up, and they are starting to now trail slightly higher than pre-COVID levels. And that's where the combination of pent-up demand and real sustainable demand comes in. And anything to do with hygiene, as I said, is we've been saying this for a while, has really been going up. So the very heightened hygiene situation is there, and those are trailing anywhere in the range of 10 to 20% more than pre-COVID revenues. Anything to do with hygiene categories like liquid toilet soaps, floor cleaners, any of those things. So there's a lot of that coming in, and now even the discretionary categories are starting to get some spending as consumers are breaking free.
Mr. Sarwate, Nikunj Dalmia also joining in. My basic question is that food as a category ideally should have done well because all of us sitting at home have consumed food. Britannia and Parle have shared the same. But when basic categories have done well, why is HUL not painting a very rosy picture of the future? In fact, what HUL is sharing and what they shared in their annual report, which I was scanning through, and when I looked at the numbers also, they are not excited at all.
I think many of the companies that you spoke about, for example, Britannia or even the unlisted Parle, they have done well. Or even a starker example is Amul. They have done well because they are focused on to food. HUL is a fairly diversified company. It's also diversified in geographies. So when you aggregate all that, I don't think they will definitely have some categories in personal care which will be relative laggards. And I think it's justified if HUL is not excited because they have a diversified, bigger portfolio, and some parts of the portfolio will not be doing well. I think they're justified.
Okay, so let's talk about where do we go from here. I guess that is an important point because some categories will normalize, some categories may not normalize, some categories will see an explosion, and some categories may actually see a decline. So, Prasun, how is this crisis different from the previous economic slowdowns what we've seen? Because the nature of consumption this time around is very, very different. Sitting at home, we are consuming more. Sitting at home, we are shopping less. The total wallet share of Indians will change dramatically because we are traveling less, we are eating out less, we perhaps are not going to movies, we perhaps are not celebrating basic festivals, there are no marriages. So do you think those are the patterns which historically have existed in a normal slowdown? They are not there this time. So as a result, we may actually see a very different kind of a cycle in staples and consumer discretionary?
Yeah, let's look at the basic consumer drivers. So if you look at it, where are the consumers saying they'll spend the most of their money? They're saying the top one is healthy food. And just note the points. So healthy food is the first one. Personal and home hygiene is the second one. Medical expense is the third one. Fitness is the fourth one. So you could see that and then is education, and then entertainment and investment. So if you look at it, there are three buckets. One is anything to do with health, healthy food, hygiene, medical, and fitness. Then it's education, and there's obviously entertainment, and then there's investment. That's where they want to spend more money. So you can see they're really building the blocks for their future sustenance. They're building a strong armor from a long-term standpoint. And what are they going to go down on? The big ones they'll go down on is dine out, travel, luxury brand spends, new cars, new bikes, tobacco, and stuff like that, apparel. So one can see that really the close by entertainment areas, they're going to really dramatically come down, and that's where the balancing of the budget and the wallet will happen. And big time spend on health, education to some extent, and then investment, to secure the future. So a very future securing situation is there. The other big trend that's happening, which is very important, is that people are starting to break free. So when you look at questions like, will you cover your mask when you go outside? Will you stay away from public gatherings? Some of those numbers are very high, but they are dropping. People are getting really restless to come out of the house. People are getting really restless keeping masks on. So while those are very high numbers, they have dropped by 10 to 15%. So something was 90 has dropped to 85%. Something was, 85 has dropped to 70%. And what has gone up in that same situation is that home remedies to boost immunity. So again, look at it, long-term care. And people are still saying that I'll use masks 6 months down the line. I'll stay away in social distancing 6 months down the line. So half of the society is still going to follow these norms, but the other half is starting to break free. And they're saying, let me do something long term. So as a result, you will find big category shifts happening over time. Categories which cater to these fundamental trends of health, hygiene, fitness, exercises, etc. will do well and communicate on those lines and launch products on those lines will do well. Something to do with education will do well. But all of these other, entertainment options that we are talking about, they're going to dramatically going down. So you'll find a very big rebalance of categories in my mind, even within FMCG, and certainly outside of FMCG a lot more.
Okay. With rural seeing a faster recovery as well, Prasun, what are some of the trends there? Which are the areas that are seeing better demand when it comes to the rural market?
Rural market is actually picking up a lot. Very good question. So, we were forecasting that rural will go up in the coming months, and we have forecasted growth in the second half of the year. But it's really heartening to see that rural has gone up already to around 8 to 9% more than pre-COVID levels. That's a very promising trend. And that is coming out of, good monsoons, which are already happening. There is, obviously the Rabi crop has been very, very good. And the reverse migration, we have estimated that for the reverse migration, 1 to 2% of rural growth is getting added in large parts of rural, where we are rural heavy parts of the country, are actually getting a boost of 1 to 2%. So everything put together, rural is up 8 to 9% over the pre-COVID period. And I definitely feel that will sustain. The rural demand will sustain. The next 6 to 9 months will be the time for rural. We have tried to do some forecasting here. We've said that in the next 9 months, between July and next year, March, we are going to possibly see 4 to 5% overall FMCG growth, but that will be, the rural growth will be almost double of the urban growth. So if urban grows in the 2 to 3% range, rural will grow maybe in the range of 6% or so. So that's the kind of rural growth that we're expecting to see. And as you know, as long as COVID stays somewhat contained in the rural areas and the small towns, I expect those forecasts to come through. And June is a good number already there, which is showing around 8% growth in the month of June versus pre-COVID times.
Great. Milind, on the other hand, we've seen e-commerce really pick up when it comes to the urban markets as well, even if they are tier 2 markets along with the major metros. Do you see the importance of department stores, kiranas actually shrinking, with the e-com boom that we're seeing? Or how do you see the dynamics playing out?
Actually, while e-commerce has certainly picked up a lot because of the huge convenience and assurances it has been offering, I think the role of kirana cannot be ignored. If you observe for the last 3 or 4 months, what has happened is the modern trade, which people were getting increasingly used to, and modern trade over time has climbed to about 10% of Indian FMCG. I feel modern trade, because of the huge footfalls and the crowds over there, was the biggest one to suffer because of the lockdown. And as a result, people had to fall back on the local kirana. Now, there is something interesting happening. And to my mind, e-commerce, as we understand, is morphing into something very different in India. I find there are several hyper-local loops coming up. There are hyper-local digital retailers. Even your roadside corner bania is digitizing through. I mean, you may not call it digitized in a high-fangled manner, but definitely people are using WhatsApp much more. There are large housing societies which are creating focus group for consumption. And I think local kiranas, because of their availability and their assurance of supply to your doorsteps, which is actually a contactless delivery, I think kiranas are coming back. In fact, I would say this is a moment where in Indian FMCG, the general trade or the traditional trade, which was on a decline in a way because of demonetization or GST interventions, I think is making a climb back. As you know, Indian rural is served heavily by the traditional trade. And as Prasun rightly said, if rural is going to pick up, Indian companies are going to need the trade in a big way. The traditional trade with its distributor, wholesaler chain will be a great aid in that. And already they are also digitizing in a big way. So I would say e-commerce is certainly picking up. But digitization of the FMCG sector is going to be massive. To my mind, after 5 years, we'll remember COVID as the time which gave a very different kind of fillip to the entire digitization exercise. I also feel that there are other sectors within e-commerce which are growing significantly. One of them is e-health, which may not be an FMCG category, so we need not discuss it, but e-health is certainly growing. EdTech is also growing. So overall, I feel digital is becoming a very strong part of a consumer's life. And therefore, it is becoming another channel of distribution in some ways.
Let me give you some very interesting stats on both traditional trade and e-commerce. And it is true that the bigger theme here is digitalization. So e-commerce is obviously digital, but traditional trade is also becoming very fast digital. And today around 10% plus of stores have digitized in spite of the huge store base that we have. Interestingly, if you look at June data again, traditional trade has really bounced back. It's bounced back almost by 27 points. And traditional trade sales are almost back to the levels that pre-COVID. And very interesting data I want to share with you, which is the number of days stores were closed. That number used to be 12 days in April, came down to around 10, 11 days in March, and now it's come to only 3 days to 4 days of store closures in June. So traditional trade stores are now pretty much open, mostly open. Digitalization is happening and it's bounced back, like I said, by 27 points all the way to pre-COVID levels. On the other hand, if you look at e-commerce is still the most preferred contactless method of getting stuff. So again, very interesting stuff. When you ask about what is your preferred mode of delivery, e-commerce comes top at 40%. Home delivery from neighborhood shops comes next at 34%. And all other home delivery of aggregators, etc., that we find, all the aggregators, that comes to another 30%. And both of those have gone up by 9% over a couple of months. So a 9% increase in both home delivery from neighborhood stores as well as food aggregators. On the other hand, if you look at visiting stores, to the point that Milind said, they are down in the range of 10 to 25%. So neighborhood stores is down by around 10%, whereas department stores, modern trade, etc., is down almost by half. So you'll find this rebalance where we'll have to reach the stuff to the consumer's doorstep, to the consumer's home. And as long as we reach it, both hyperlocal and e-commerce both will do well. And that's what we are finding in the data, that traditional trade is doing very well and e-commerce is doing well. And all these delivery modes are doing well, just there are different avenues and channels onto the doorstep of the consumer. And so contactless is going to be the word for the future.
Absolutely, gentlemen, we'll leave it there. Thanks so much for joining us this morning. Good chatting with both of you and getting a sense of how things stand. We're going to take a very quick break. Back in just a moment.